The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this 8th day of June. My pleasure to be here. Hey, a couple of things going on, very important. How does the market react? Which sectors of the market reacts? And what is still working and what is not working right at this particular moment with the Comey? I haven't heard a word of it, but with the Comey testimony. Now, we call it testimony, but I don't understand why people aren't making a big deal of the fact that he wrote this as an afterthought. It was after a meeting, and he's the only one. And it's one person's word against the other. I don't know how they can call this an impeachment situation. I don't care which side you're on. It just sounds to me like this is just a mega hysteria. And it's just a very strange thing that's going on. So with that said, and the reason why I'm saying it, normally I wouldn't get into the political side of it because there is a political side to it. But I need to because I'm kind of confused. I'm looking at this and I'm saying, wait. I remember the Nixon hearings very well, the Watergate hearings. I remember many of these things, and there was evidence. There were facts. I don't actually see the facts here, so this is very confusing. So we'll see what happens. And I think the markets say it's not down 110 points. It's up 10 points in the Dow. The S&P is down 29 cents. It's not down 29 points. It says to me that we've got to sort out what is going on, because the reality, remember we spoke about this months ago. I said, my conclusion is that with Trump, it isn't the words, it's the actions, and those actions are really what the market is going to deal with. And that's what you've got to be doing all the time. It's a different panoply of expression and ways of expressing, and you've got to learn to deal with it. And I think the market has said, hey, the small caps are catching up to the Qs. The Qs made their all-time high. The S&P followed. The Dow then followed with the New York Stock Exchange. What's lagging? The Russell 2000, the IWM. And at this point, it's up. And that's the only thing I'm particularly interested in. What is the market doing? So now let's go to the market, and enough with the whining. Let's just go straight to the numbers. The Dow, INDU, Dow right now is up 20. It is trying to tackle a new leg on the upside, leg E in the daily chart above 21,225. I've got to get used to saying these numbers. And the weekly chart is just extending this leg E/B. 120-minute chart, I meant to show you just the trading band in the 120-minute E-mini chart. Look, trading between the two 24.25s and the 24.36, 37 area. And a break above it means that you could quite easily go to 24.40, which would be, in fact, a new all-time high, and then take you to leg C in the E-mini daily chart, which is what I'm anticipating is going to happen at some point over the next day or two. All right, enough with that. Now let's go on. And so the parameters for the Dow are quite simple. The upside, a break of the 21,225 level, essentially opens that up. I don't think it's all that much greater. Let me just show you this chart. I'll be showing it to my subscribers on my opening call tomorrow in much greater detail. But I just want to show you this. You see this Dow monthly chart, very long-term monthly chart, goes back to the 1990s. Look at these beautiful up channels, down channels. Look at this up channel. The Dow is now going into the Chapman wave inside track repellent resistance zone. And that zone can take you to the upper level. This is this month. This month can take you to 21,560s and anywhere above 21,200 and I'd say 50s starts the process that says, okay, Now you got to be careful. Your foot has been in the accelerator for the moment. It's got to. There's the monthly chart, but it's got to be. You got to put your left foot over the brake pedal for just a short while. Okay. And now let me go back to these charts right here. The S&P. And what's fitting very nicely into the scenario that I've been talking about is that the S&P, there's no other way I can count it, that was a peak B at 2440.23 on the second, and we need to break above that by 1 penny to start leg C. That says that we could have a very choppy period going into early next week, going into maybe Tuesday of next week. We'll see. Meantime, back at the ranch, what I want to look at is the parameters. 24 at 24.34, 24.22 to 24.19 is key support. Has to hold that. And the upside becomes somewhat open. But I would like the Dow, maybe 100 points, 150 to the upside. Maximum I'm looking at right now. So maybe another 20 points, 15, 20 points to the upside in the S&P. And then I think we've got to really be very careful. Now, what I'd like to do is to look at the QQQ made a new all-time high today, squeaked to a new all-time high at 143.80, above the 143.73 high. And that says it's continuing this leg C. And it's a leg F. I'm calling it F for now in the weekly chart. Let's get rid of this 120-minute chart on the right here and show you that the QQQ's leg C in the monthly is spectacular. And it's really looking very powerful. And it says that 138 would be the first real big test of support, and 131 would be next if there's a major decline at any point this summer. So we're looking at that. I'll just quickly go to the XLK. XLK is trading also all-time high leg D. This is S&P Select Tiger Spider Fund. The SMH has made a new all-time high, 88.47 up 57. I'm calling this a leg F/B for now. It's getting somewhat toppy, but the stochastics at 94%, still holding beautifully. Let's go to the IWM. IWM, is it up? Yep, it's up at 140.13. It's up. The reason why we're long in my opening call for my subscribers, the Russell 2000, actually more than long, we're very long, is, and we've now tightened the stop. Thank goodness we can now tighten the stop. Is that I'm anticipating we go a penny, at least a penny above the 141.82 all-time high for leg D in the monthly. And now finally you get the Ds and the Es in the monthly. It says now you can start looking at some downside activity. That'll be E in the weekly, and it will be probably recycled and pick up that a peak C that was sitting there on the 26th of April and go to a leg D. And then we've got to be real careful. That's my anticipation. Let's go to gold. Gold right now is trading down 14, sitting on the 9-period exponential moving average. I've spent some time on this. One of the reasons why we tightened the stop on our metal position that we have in my opening call is that, you know, I think we're in for a little surprise coming up here. I'm going to be watching gold real carefully because it's made a peak E and it fractionally went above the last peak E. That is a good sign, because if it did it below, I'd be a little careful. This is the gold. Trading vehicle, the Spider Gold Trust. We'll come back. We'll look at silver. We'll look at T-bonds. We'll look at crude oil, and we'll look at wheat and corn. I'll be back. Basil Chapman, Tiger Conditions, our Dows of 19 S&Ps. Up 25 cents.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're back. So we're back and we're looking at crude oil. I just wanted to go to crude oil. I was asked about crude oil in the den. Crude oil is in a leg D. It is trying to hold above the candle. Remember I said that the candle of the 5th of May, I think it was the 5th of May, which has a low of 44.10. If the price of crude oil holds in the 5th, did I say 46.20? I think, no. Oh, 45.20, that's right. 45.20 level for about 320-minute bars. There's a real good chance it's going to test and break, and even maybe break the low. If it can hold above it and have a bounce, it allows for a bounce before it comes back to retest. Well, the low today was 45.20, right? Bingo there, but it hasn't held there. It's now at 45.72. So we have to look at the 120-minute chart, and the 120-minute chart has a lousy pattern. It would be fantastic if it made that low, and instead of being right now at 45.72, it was the high of the day, high of the bar of 46.14. Instead, it's 50 cents lower. That's not good. So that says to me that crude oil is not quite ready to make a decent rally. It's ready for a little bit of a bounce attempt. I don't see it doing much more than 46.30s, maybe 46.70s. I don't see it hitting the 9-period moving average of 47.54 just yet. I think there's a good chance that next week we get reversals in many of the indices that were weak and many of the indices that have been strong. I think I would include in that the VIX index, which is trading right now at 9.88. It's under 10. It's back in the 9s. I think the VIX is getting really close to some kind of a bounce, and I'm anticipating that by midweek next week, there could be a trend change. And that would include, I don't know yet, I have to do my homework, I have to wait for Friday at 4 o'clock, and then over the weekend, that would include the TRCCI, the Thomson Reuters Continuous Contract Commodity Index, trying to have a pretty decent bounce. And one of the reasons why I'm saying that is, look, W is, even as I've written that B, it's taking out that B. This is up 9.5 at 454. This is a weak continuous contract. I was looking at it the other day. I said, I like the action. I think it's acting very well finally. It made that arch formation. It didn't take out the lows of 416. In fact, it ran up. And now you've got yourself in wheat and in corn. This is corn continuous contract. Even as I typed it in, there's a left side, right side price time match that says buy the 14th of June, the 393s. Now, this is a continuous contract, so I'm going to give you the date because the price changes. It was a 393, but that could change because it gets smoothed out. But it is the high of the 16th of February that is going to be tested with the Chapman Wave inside wedge target line. And that says leg C. It should still go to a leg D. And I'm thinking it's going to surpass that high of the 16th of February, the way it's acting, because the MACD is very strong. But when it pulls back, how it pulls back is going to be really important. Why? Because the weekly chart is still within a range, and the monthly chart says most of the indexes that have made this kind of pattern have squeaked to a leg C and then pulled back some. So there's the pattern that I drew a long time ago, the arch formation that has the potential to go to a lowercase m formation unless decisively piercing, closing, that is, in a monthly basis, the left side high, in this case, Korn's high of February at 393 and 3/4. Remember, it gets smoothed out, so I don't know what the price is, but it's that high. A decisive close above that, especially so early in the month of June, would be very positive. And in the we had a peak D. This could be starting a brand new cycle to the upside. I'm still only going to call it an E/maybe B, if that's where we are, if it takes out that 393 and 3/4 high of the week of February the 24th. Okay, so just to get back to the crude oil, USO, yeah, nice. It's a decent candle. The reason why I wanted to go to the USO is that the crude oil continuous contract is still much higher than its low on the left side. But the USO made a low of $9.43 on the 4th of May. $9.43, 5/4/17. Then it ran up to peak ABCD. Remember Chapman Wave? What do we look for? We look for this pattern here. Identify the lowest, most obvious low bar, merely count each successively higher peak. Peak A, B, C, D. The fourth highest peak is where other things can happen. And where are we? We went to a peak D right there, made a left side, right side price time match, plunged to the downside in the daily USO United States Oil Fund. That was on the 12th of April. Comes all the way down to the 5th, to the 4th. Sneeze. I wonder what it is about this. Maybe it's the show that makes me sneeze. Every time I sneeze. All right. A doji candle high on the 23rd of May, on the 24th of May at 10:54, comes all the way back. So we've got the same left side, right side price time match unfolding right now, except for one little thing. Today's low is 937. We took it out in a shorter time period, and then the left side, right side price time match, and that says that if there's a continual decline, that it doesn't stop here. By the end of the day, it actually goes down, or tomorrow it goes down again. That's going to be very negative because you took it out in a much shorter period of time. That shows that the weight of evidence is leaning towards the downside. However, if, in my rule of thumb, with the left side, right side price time match, really, let's talk about the arch of the inverted V-shaped pattern. If the left, there are three rules. One is if it doesn't take out the left side low, starts a new buy mode above that, that's very powerful, and that can go all the way back to the top. If it takes it out but closes above it, it can go back to the last peak of importance just 2 days ago of $9.99. And if it takes that out, then you just move peak by peak. It'll be $10.16. That is, if there is a close above 943 today, it's at 947. If there is a close below for 2 out of 3 sessions, that's a big negative. It says you could bounce, but you're probably going to have to do a retest before you get a kind of a buy signal. And that's the way I'm looking at it right now. The weekly chart says, no, there's still weakness. So that makes it the next few days very important. Now, a question in the den about steel stocks. Let's just do that. SLX. SLX is the steel Van Eck Vector Steel ETF. Nice candle today. It's up 59 cents to 36.79. Lousy chart formations, especially in the weekly, But this is a start. It's a start because if it broke underneath 35.70, it would have said, I'm going to go retest the low that was made, that kind of almost an island reversal candle of the 18th down to 35.03. And now we're almost 2 points above that. And it says, is this a turn? And we'll be watching this real closely. But in the meantime, it's just chop, chop, chop in a sideways formation for the SLX, which is trading at 36.79, up 59 cents. Now I'm going to go to the TLT. The TLT is down 47 cents at 124.45. This is going to be a really important phase. Why? It made that peak E. It's gone below the left side high of 124.98 from the 18th of April. If it closes below that, it's almost the reverse of what we were looking at in the H pattern. In this case, it's in the cup or the V-shaped pattern. But that weekly chart is still pretty darn strong. I will talk about that, and I'll talk about rates, and I'll talk about some other things, because we also want to talk about the iShares Global and Timber Forestry ETF, WOOD. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I had a whole bunch of really good questions come in here. Let me just deal with them one by one. So one is just a piece of information for those who listen. You know, we often have George from New York call in, and he's has some really great long-term positions. So he's looking at VRX, and he gave us a story to say that VRX, Valiant Pharmaceuticals, have really been cutting back. They've been cutting back and selling off divisions. They promised that they would do a lot of prep and then execution of getting rid of excess, even though some divisions might be good, but they needed to get back into the black, and that's what they're doing. So they're up 1.13 at 13.30. A nice, it's a good start. I think it's going to need a lot more work, but this is really a good start. It made a double top in the 14s, pulls back to the 1180 area, and now it's trading at 1330. So yeah, thanks for the update. And yes, they just sold Innova for 930 million. And they really are working to get cut the debt. So that's a good sign. So thank you for the update there. Next thing is GT wants to know about GS. GS is Goldman Sachs up 2.95 at 218.73. It's funny. I looked at the financials, and in my assessment of everything over the last 2 days, I was trying to decide, should my subscribers go long the financials? What was to lose if they went long the financials, which have been pulling back, especially when the Fed says that they want to raise rates? And my thinking here is that they will raise rates. They can raise rates because the rates have dropped so precipitously over the last few weeks. So big deal. They raise rates, and the rates can go up a little bit. They don't have to go very much. But the banks would like that as a background filter to say, ha, rates are going up. I didn't pull the trigger. I wanted to just get through the day. Just we got positions. We just want to stay with those positions. I like the fact that Goldman Sachs is running, but it's really not a big deal yet. It's an attempt to start the process. But the XLF has got a really beautiful candle, except when you look at the weekly chart, say, oh, yeah, it's been there before. But I do think what it's doing is it's saying to us that the whole area of 2310 to 2260, that should be a very strong support level. So if anyone's looking at this sort of longer term, this is a place where maybe you can just start your positioning in the banks, maybe with the XLF as an overbid. It's really a starter, a feeler, because I'm not sure we're out of the woods in the chop phase of the S&P Select Financial Spider Fund. But yes, it is way better. If you look at JP Morgan, JPM, not JPB, JP Morgan, nice candle, doing well. Also leg D to the downside, could be a peak, a trough D this week. That is a good sign. Only a B in the monthly. It's one of the better ones. If you look at Bank of America, BAC, yeah, nice start. It's an idea that just to say, hey, even at the high of the day here, it's not the high of the month, because they really dropped quite sharply, these different banks. I would say, yeah, if you're interested at all, this is probably a way to at least initiate a position, and then you can work from there. So I hope that helps you. And now we're looking at, so the call XLF 915 is set up 25 strike. Wow, 25 strike on the XLF, huh? To 23.93. So this could follow through to tomorrow. Yeah, very nice. 25 would be another point higher. That's that would be really a big breakout. Anyway, thank you for letting us know, GT. Bob wants to know about JWN. You know, JWN, I hardly ever, it's just not near me, so I don't go there. This is Nordstrom. A big move up 4.68 today at 45.16. It's made, actually, it's turned into an island reversal to the upside. I believe, I'm not sure, but I believe there's something about a take-in that they're going to buy back. They're going to go private. I think that's the case. Well, if that's the case, I'm not sure why people are buying in at 45.13. Well, maybe because they think it's going to go even higher as the money has to come in to pay for it. But as it stands right now, this is still saying, hey, this is an area, just be careful. You can't pop up on news like this. It is a really good, I know that when I've been there, I've always been impressed with the quality. I don't ever see people in the place when I'm in there. There must be people, but when I've been in, it's been very quiet. And I didn't quite understand how the stock had done so well. But for the last 2.5 years, it's really been terrible. So I don't want to say, I would not be buying, I wouldn't be selling, I wouldn't be doing anything. I'd just be looking and say, wow, nice pop. Allows the action from the 76s down to the 35s and now trading at 45. So that's it. And let's go to the RTH. That's the this is the Market Vectors Retail ETF trading at 83.36, up 38 cents. Yeah, it's almost at highs. All-time high is 84.08 just a few days ago. Now it's at 83.36. And I've got it as an E/C, and I would not be surprised if it too goes to a leg D. I'm expecting Ds in the ones that haven't gone to Ds. It could be off the wall, crazy. That's what I'm thinking. That's good. And the next thing we're looking at is the XAL. Well, XAL, of course, I spoke about the XL is down today. It's down 89 cents. I think it's also going to a leg D. But that weekly chart, I have to call it a C. I don't see why I need to call it anything else but a C. So that's still very positive, and that's suggesting crude oil still has a little bit of way to go down before it turns around, and that might take 2 weeks, maybe 3 weeks. But then I think crude oil will have a pretty good bounce. But it might be quite a bit lower by then. Then OIH, we've got our usual question about these things. Oh, man, that weekly chart, look at it. It took out the left side low. The MACD is still very negative. Stochastics at 8.78. Thinking of 8.78, think of it as this is the area where it is. Remember, I always say above 80% in the stochastic is not oversold. It is what you want to see to sustain a move to the upside, and below 20% is not not overbought. It's what you want to see, and below 20% is not oversold. That's what you want to see if you're bearish. And this is at 8.77. So the best is maybe a pop up to the teens in the percentage of the stochastic, and then come back to retest. So all I'm saying is that the OIH, the market vectors, oil service, ETF, I think it needs a little time. Next week is going to be pretty critical for a whole bunch of these things. I've got cyclical dates, and all sorts of things coming up. We'll see what happens, and I'm expecting a leg D in something like the S&P, which is only in leg C. And then we look at the SPY. The SPY, yep, it needs to go from 244.02 was the high today. It needs to get to 244.36 for a leg C. Okay? Otherwise, it'll fail, but I think it'll make the C before it fails. Then the next question. So, yeah, the airline index, let's go back, XAL. I think it has a way to go. The MACD is good. The stochastics at 92%. All I can say is that I would not be short. I think it's going higher, at least for the very short term. Then final question was, what about the, so Dan wants to know, Basil, can you talk about the XLF and its big move up today? Where do you see this going to? Is there a place you would look to go either long or short? No current position in this one. Thanks, Dan. So I think I just did that, and I said I would start a little nibble at that point right here. I would start a position if you wanted to get into the banks at all. I'll be back. Basil Chapman, Tiger Conditions Hour. Dow's up 18, S&P's up 1.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Someone mentioned Snap, which is Snap Inc., Snapchat Online, down 1.26, down 6.47%. Wow, there's that H pattern that we don't like to see. That makes the 17.59 level really critical to hold. This could turn out to be lower lows and lower highs for a little while longer. Okay, so now let's go to, I want to do, high-grade copper. High-grade copper up at 2.5965, up 40.045 today. That's that same pattern. We're looking all over the show. The weekly charts look lousy, and then you have a good candle, but the candle hasn't changed the pattern yet. So unless copper can go to 2.64, 2.65, really, if it does that, I'd be really impressed with it. But up until then, I have to say, okay, chop, chop, chop. It is good that the stochastic and the weekly chart has started to move from the under 20% to 30%. I like that. I like the fact that the MACD is starting to flatten out. I like the fact that the monthly MACD is still good. So this is part of a consolidation phase. I do think copper will move higher later at some point. But right now, I don't want to see another pop to the upside, these big green candles, just a whole bunch of red candles follow it afterwards. So, yeah, watching copper closely. Closing under 2.51 would be very negative. It's at 2.59, and pushing above 2.65 would be very positive. And that's the way I'm just going to look at it for now. Okay. Now, there are a couple of things that I want to look at. Within the context of the longer term, this pattern that we're looking at right here, where long-term trend lines are met with reversal patterns. First at a peak D, this is the monthly chart of the Dow. At a peak D back in 2011, that was in the April-May period, makes a top and pulls back. That was the only big consolidation we had in the monthly chart from the 2009 low. It was the first big one. And then nothing happened. Nothing happened until that very big one right there. That was in May of 2015. May is the month. Sun in May, right? And then it pulls back and it holds and it creates a trend line support, which it broke just briefly before rallying again. So what we're looking at now is that we're in leg E. Well, look, leg E went to a peak F back in 2007 at 14,198. A D went to an E at 11,749 back in January of 2000. So we've got to be a little careful when you go very quickly from a peak D to an E or an E to an F. And right now we've gone from a D to an E. There you went from an E to an F to a G. That was very unusual, the high that was made back in May of 2015, because there was a certain sequence of very quick moves to the upside. So what I'm looking at here is there's a chance that we're becoming toppy here, and that the risk is that you could go 150 or so points to the upside, but you've got to be prepared for an 800 to 1,200 point decline if the three key indices that I'm looking at, and I'll go to it right now, the QQQ, let's just do that, go one at a time. We'll look at QQQ. Let's see. I've got other charts, but we'll look at this one right now. It's broken above most of the trend line resistance levels. Now, I have a whole thing that I used to do over and over and over again. I haven't needed to do it for a while, but I've started doing it over the last 2 months or 3 months, and it goes like this. There is a move to the upside that comes back, has a retracement, and then starts back up again. The low that is made sets in place, oh, am I going to mess this chart up? Yeah, I guess I am. Sets in place a trend line. And that trend line in this particular instance is like this right here. And it works beautifully. I'll make it nice and thick so that you know what I'm talking about. So this one here, we're going to call it blue. We're going to make it thick. Wait, make it nice and fat. Okay. So that trend line goes in place. And then all of a sudden, and look, even though it's a trend line that started back in actually, this is the second trough. That's the rebound that was successful above the 2505 low back in 2008. This one went to 2526, and that was in March of 2009. And then look, so I don't want to spend time on this. There are times where the Dow and the semiconductor index and the Qs make lows at different times. One was in October of 1997, I think, and the other one was in March of 1999, so that one had already started its buy mode in the monthly, and the other one only just began. In this case, unlike the 2009 March the 6th low of the Dow and March the 9th low of the S&P, this made its low back in November of 2008. Just let me get that out of the way. So trend line only started from the low of the 9th, the low of March of 2009. So it goes very nicely. It holds support, it even holds a support at 84.74, that big plunge in August of 2015. Aha. What happens after that? It starts another trend line. Here's the next trend line. I'm going to make this one. Let's make it red. Let's make it red because the next one will be green. And make it nice and thick. Wait, nice and thick. There it is. So now we start at an angle. There are three angles that I look at over a period of monthly charts over a long period. This is a long period. This is exactly what we want to see. The next one will be the pullback that we get to make a peak C could start the final acceleration phase of the trend line. And that usually is, it's more than 45%. It could even be a trend line that goes to something crazy like 75% or even a little higher. And then it's parabolic to the upside. We haven't started that phase. We haven't even come back. And that says that 143, there could be an 18% correction to take you to the trend line of 123, or maybe in the 9-period moving average of 131. But I'll be looking to start the next trend line. So here I am. The question was, Z in the Den says, to Chapman Wave, please tell us about long-term monthly NDX charts. Thanks, Z. So I'm looking at this and I'm suggesting that we were within a week of some kind of a pullback, and I think it's going to be fairly vicious. It has to be market oriented. I don't want it just politically oriented. It has to be market oriented. In other words, it has to come from some report that says the semiconductor index, new fab that's being built in Taiwan, I don't care where it is delayed. I don't care what it is. Whatever it is going to be an economic barometer or even a thermometer, because it's going to say everything up until now has been great, but all of a sudden we've got a little bit of a fever and we have to deal with the fever. We weren't expecting it, but now that's kind of what I'm thinking of. Together with that, we have to have bad news, and that's bad, both political and economic news, that is the dark cloud. You know, we always talk about the cloud. This is the dark cloud that's going to create this series of thunderstorms. and turbulence, and that has to hang over the market. And the VIX index cannot be in the 9s and 10s. It has to be from the 13s to the 15s. That's the scenario that will hold a sustained bear phase, even if it's a short-term bear phase. But until then, the path of least resistance is so far in many of the indices still up, but we're getting close. Question in the den about MWA, we'll talk about that when I get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So we're looking at MWA. Mueller Water Products, Diagnostics, Monitors, Controls, Water. In the monthly chart, it made a low back in 2009. It did a retest, successful retest, somewhat like we saw the successful retest in the QQQs. It makes its retest in 2011, though, in an H pattern, and then starts a beautiful move that goes from the below 2 to a peak E, and then a very quick ABCD. Remember the quickie in the Chapman wave, you go to a D, the quickie, you're going to have a pretty good pullback. And it goes from 10.54, remember it was at 1 point something, to 7.04 in August of 2015. And then it has a peak A, a peak B, and a peak C. I spent a lot of time on this, deciding whether or not I was going to use the $11.13 high of April of 2016 and the $11.14 high, 1 penny higher, of May as a Chapman wave phantom peak. I thought about it a lot, and then I decided I would not, because the MACD was still very strong. The stochastic hinted that there was a little bump there that I could really use it, and the shorter term weekly said, you know what, you could really use it. I didn't. I'm a little sorry now that I didn't, because there was a peak C1, C2, as well as I could have called it a phantom peak to make that a peak D right in December of 2016 at 14.20. So the question of the den, based on the Chapman Wave methodology, is this just a retracement with D still to come, or is that it? Are we done? And I have to conclude that, first of all, I think the whole water area is still a viable area in the stock market. So I like this. Where do we get in? Well, I'd have to use a shorter term, but the Chapman Wave methodology of the stalk leg formation has this long leg. It's made up of many peaks. It doesn't matter. It's just a long leg to the upside. And then there's an oval pattern. The oval pattern is not a rectangle. There is if you cannot identify it, you just don't use it. But if you can identify it as an oval, treat it as an oval. The rule of thumb is that if you take out the high of the top of the oval pattern, the body I call it, and this is 10.54, it starts the neck. Then the neck comes to a conclusion and it becomes a head and then a beak. This is a stalk leg standing on one leg. There's the one leg. And then the rule of thumb is the test is at the previous high. This is 10.54. And that's really my target. The low so far has been 10.84. I think it's going to go towards that area. It's at 11.11 right now. I think it's going to get there. And then the rule of the Chapman Wave methodology when it comes to the stalk leg formation is that when it concludes, there is a powerful move to the upside, and then you're on your own. So, yes, I do like it. I'm going to be watching it closely. I would like to get it back. We've had it once. I'd like to get it back again as on a buy signal, but not yet. I'm just holding off. I might have to buy it a little higher than I expected. It's made a trough E in the weekly chart, but I do like it. It's got a lot of characteristics that I like. I just don't like it right now until I get a little more confirmation about, is this the final support area at the 10.84, or is it going to test the 10.50s, 10.60s that I think it's going to? I'm going to hold off, but it's on the radar. Keep reminding me, Peaky. Thank you very much. So we're about to wrap up and speak to you all tomorrow. Have a great day, and thanks for being here. Check out my opening call. Let's watch this closely. If by this afternoon the Dow is still holding very well to the upside, instead of turning down to minus 30 in the Dow, instead of being up 22 right now, it's actually up 35 to 45 points, and the banks and the IWM are still leading to the way up. That says you've got a rotational phase coming in right now over the last day or two, and this could go into early next week with those same leaders holding fort, and that's the way I'm looking at it. And then next week, I think it's going to be a very, very important week for so many indices. I think it's going to be one of the most important weeks we've had for a very long time. Basil Chapman, Tiger Technicians Hour. I'll be back tomorrow morning. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.